Welcome to Lesson 8. In Lesson 8, we're going to explore the Dash Trader Pro platform. Okay, and also at the end of this lesson, I will give you some free alternatives that you can use until you're able to fund a live account with my recommended brokers and gain access to the Dash Trader Pro platform. Of course, they won't be the same. However, once you have an understanding of the Dash Trader Pro platform, then you will be able to use those free resources to simulate what day trading with Dash Trader Pro would be like. Okay, so without further ado, let's take a closer look at the Dash Trader Pro platform. So if we take a look at the bottom left, we're going to see numbers flashing across the screen. So this first box that you see here is called the level 2 montage. It shows the depth of market. On the left side, these are the buyers. So these are the persons that are lining up to buy at 1686, 1685, 1684, and so on. So these are in 100 multiples of 100. So instead of putting 500, it's summarized with 5. So we have to multiply each of these by 100 to get a real idea of how much demand is really at 1686, and the same on this side to show how much supply is at 1687. Now the difference between the bid price and the ask price is called the spread. So what I do is I set my level 2 to show me the spread, and as soon as I pull up a ticker, I'll be able to see the bid ask spread. And this is very important because this is going to tell us if, for instance, when we put our stop in at 1669 and our stop gets triggered, it tells us how far below our stop we are likely to get a fill. In this case, I do not expect to get filled more than 1 cent below my stop, right? Which is really good. This is what we want to see for stocks that we trade. Lower price stocks, we want to see a 1 cent spread. Slightly higher price stocks, let's say between 50 to 100, we want to see between a 2 to 5 cent spread. Stocks over 100, we don't want to see more than 10, 20 cents or so spread. When the spread starts to get above 30, 40, 50 cents, then that's too much, because if we're planning to only lose 100, if we're wrong, we can end up losing 120, 130, 140. And if we're taking hits like that in the long run, it's going to make it harder for our winners to compensate for our losers and give us profit. Okay. Now, this second box, right? Every time shares trade hands from a seller to a buyer, this box shows the transaction. So yeah, again, we have to multiply by 100. So what this is saying is that at 1050, 15, 100 shares exchange hands from a seller to a buyer at $16.90. So even though we are seeing on the level to 1687 by 1688, we are seeing transactions occurring at 16.9 above the market, which is telling us that prices are very likely to go higher in the short term because buyers are aggressively buying above the market price, the inside ask price. Okay, so that is a level 2, and this one is called the time and sales. Now I introduced you guys to the chart before. This is our intraday chart. This is our signal time frame, the 5-minute chart. I explained all the lines. Now there's some other stuff that I have to introduce you to. So I have the pre-market high, and these are automatically programmed on my intraday chart with DAS. That's one of the reasons why I love DAS so much. Automatically shows you the pre-market high, the pre-market low, the prior days high, the prior days low. And I also have a program to show me the prior candles low, which in this instance is 1670, and the prior candles high, which in this instance I believe was around 1691 or thereabouts. And it also shows the current candle that is forming low and high. So this makes it easier for me when I'm doing my trade planning to input, my entry price and my stop price, because I know my entry price is going to be 1 to 10 cents above the prior candle's high if it's a long, or 1 to 10 cents below the prior candle's low if it's a short, and my stop is going to be 1 to 10 cents below the prior candle's low for longs and 1 to 10 cents above the prior candle's high for shorts. Okay, so that's the charting. Now, this box that we're looking at here, this is called the market viewer or watch list. So I always have the SPY, the QQQ, and the IWM. These are called the market indexes, index ETFs. So these are like a representative of the largest companies in the US stock market. And the SPY is made up of the 500 largest, most profitable companies, Apple, Microsoft, Google, what have you. The QQQ is made up of the 100 largest tech. So this is one is more tech focused than the SPY. The SPY has other sectors like healthcare, retail, and so forth. And then the IWM or Russell, this are the 2,000 companies, but these are the smaller end, smaller companies. And when I say smaller, I mean they're not really small, but relative to the SPY and the QQQ, they are relatively smaller. So now up here, I have this box. So when I get triggered into a position, right, this box shows me the position, the open position. So this box tells me I have 500 shares long PL at an average cost of 16.89. Okay, it's because it's in green, I know it's long. If it were in red, then I would know it was a short. It's a short position. And this is just a general box that's showing me that I'm in my account. It's a margin account, how much buying power I have, and I only keep the realized profit on a day. So this is like my bankroll. Each day I only risk 300 US. So if I'm down minus 200 on the day, then I know, okay, I can only take one more trade on the day until unless it's profitable. If I'm up 400 on the day, then I know, okay, I don't have to worry about putting on one, two, three new positions as long as I meet all of my criteria because I have the room to handle it. Okay, so this is just a brief look at the Dash Trader Pro platform. Okay, now I will show you an alternative software, an alternative website that you can use to practice your trading until you can get access to Dash Trader Pro by one of our brokers. Well, first of all, you can, if you have the money, you can make a direct subscription for the Dash Trader Pro simulator. Okay, so you can go to the Dash Trader Pro, the dashtrader.com website, and you can, in fact, you can get 14-day free trial. But after the 14-day free trial expires, you can pay a monthly fee. You can get the cheapest one here, this one for 100, pay via Stripe, and you can use this to practice until you're ready for the real deal. But if you don't have any money at all to pay for this, then you can use TradingView. It's completely free. You sign up for it, open an account with them, a free account, and then you use a paper trading account, and then you simulate an account balance that is going to be similar to what you are likely to start with. Okay, so I can't quite recall how to adjust the amount of money, but so if you plan to start with 2,000 US, 1,000 US, 500 US, 3,000 US, then you adjust it to suit, and then you practice. You go to trade. So if you see a setup, and you want to buy, then you go, let's say 300 shares at 209, by stop, and you can put it in, and you can practice just the same way as practice to place the same trades along with me while you're learning for free without putting any real money at risk. All right. So guys, this was lesson 8. Looking forward to see you soon in lesson 9.